Hello everyone, very happy to meet you today for a new video on Bitcoin. So, a huge progress report because, concretely, what is this mess? What are these big 10 kilometers wicks that came to hunt everyone's stop losses? So, it's a phenomenon that is extremely rare and very difficult to anticipate. Obviously, we can't predict crashes like that, it absolutely ruins all our technical analyses. I have Ethereum in mind, which was in a super contraction, so today we're really going to tackle BTC. We're going to look at what happened with these liquidations, why we specifically came to test these price levels around $89,000 so we had already approached $95,000. So we're going to talk again about market sentiment, liquidation metrics, and a lot of things today to answer this question: are we still in a bull market? That's the question you're probably asking yourself. So, we'll dive straight into the details. Starting this video with macroeconomics, we have to go through it. I'll try to summarize everything and explain precisely why we had these movements that were so brutal. The first thing, we had extremely bad macroeconomic news, very anxiety-inducing. In reality, we knew that Donald Trump was going to impose tariffs on Canada and Mexico, but the counter-tariffs, that's news that just escalated. So, when Donald Trump says, "Since you put 25, I'll put 50, we enter into something else," agreed? Especially since he applied them. The market hates that. Personally, I don't like military wars, obviously, but structurally, financial markets hate economic wars. They react much better to military wars than to economic wars. Economic wars, tariffs, and such scar the markets. It puts them in doubt, which is why gold hit an 80th all-time high, and the dollar regained value, while indices took a beating. So, economic wars are probably the worst thing you can encounter in the markets, and it can get us into a bad situation. Honestly, it's really possible. So, be careful. I think it's a form of bluff. I think it's to negotiate an agreement. Moreover, instantly, we saw today that as soon as the markets began to plunge, Donald Trump started making announcements, saying that with Mexico, the tariffs were more or less abandoned for a month. He said he was meeting Trudeau to discuss, and so on. So, you see, the speech is softening, it's not the same anymore. He doesn't want to become unpopular either. If the markets collapse because of his economic war announcements, that's going to make him unpopular. So, I think he's softening his speech and starting to reassure the markets a little. That's what I think, at least, about the macroeconomic situation now. What actually happens when an order gets executed? It's very clear. On the weekend, you have few institutions trading, so it's mostly individuals and market makers, those who bring liquidity to the market. What happens, I think, is that for movements like this on the weekend, market makers can push a little to trigger stops in series, especially when there's bad news. On top of that, you have algorithmic bots getting involved, market makers pushing prices a little, and that's how you get what we call liquidation cascades. So, what's a cascade? Let's say you have an order here. In reality, the pockets you see there are liquidation pockets because you have longs here. These are stop losses, or rather, liquidation levels. When someone opens a long, and we come to hunt their liquidation, it triggers a sell order in the order book at market price. What happens then is that when this order gets executed, it directly triggers a sale, which then triggers others. One sale triggers the second, which triggers the third, and so on. And since we're talking about millions, hundreds of millions, or even billions, we get what we call liquidation cascades. That's why, as soon as we hit these pockets, things really accelerated. So, we hit the pocket, and when we pierced it, we had panic from people who probably sold, obviously. We had the stop losses, and we also had the algorithmic bots pushing things, trying to scrape profits. So, we ended up with generalized panic, and what we call a crash. It's really a crash. These events are extremely rare, extremely difficult to anticipate, and they ruin technical analyses. For example, I have Ethereum in mind, which was in a super compression. We would have expected positive news to break it upward, but instead, it broke downward. So, we'll probably talk about that again during the week. It's very important to know that these phenomena are extremely violent, and when we hunt these pockets, we always get a very violent, very powerful rebound afterward. Generally, after liquidation cascades, since there are buyers waiting, you get a rebound. On Ethereum, it's the same, you have people who bought at $2,000. These pockets are opportunities for some people who place orders and get filled, triggering the rebound on the next day's good news. So, that's it for liquidation cascades that happen on weekends, caused by market makers, algorithmic bots, and bad news. That's what caused these wicks. Regarding the MACD on the weekly chart, we still have this correction going down on the MACD. What's reassuring is that we're still around $100,000, even as we start to go negative. If we manage to hold these levels, we'll see. We're really in a range, and if we manage to break the MACD and go negative here, we'll have a continuation on Bitcoin if the news is good. If not, look what happens when the MACD starts diving like that from the tops and we go negative, we can have much stronger corrections. It's the same, once you go too negative, we hit an extreme drop. On the other hand, when we consolidate with a negative MACD like the last range here, it pretty much assures consolidation. So, overall, we don't have much left to really determine our fate. If you see the MACD starting to go negative while we're still stuck in this channel, it's extremely bullish. We'll have that information, so I'll talk about it again then. The way we seem to be going, especially since we've recovered a good part of the drop on BTC, suggests consolidation within this range. And now, let's go straight into the details and look at market sentiment. Let's not lie to ourselves, these patterns have completely broken down our technical analysis. We're in something else now, something we've already mentioned. I had already drawn this range for you last week, and we can say that officially, we're in it. We're in this range, meaning that for now, we shouldn't expect much. We're really bouncing between the bottom and the top, so we're going to get bored again, it's terrible. But we're inside this range, and as long as we stay in it with the MACD starting to pick up, we should still consider the possibility of a bullish continuation. Having this rejection candle with the restoration and recovery of lost levels is something positive for now. We can already observe that if we remove the wicks, we still have this hidden divergence, which shows that we've found support. That's also something positive. The context we need to observe in the coming days is everything that happens between these two limits. It's going to be noise. What interests us now is to maintain the same approach, it hasn't changed. It's very important to have a wick that gets swallowed. If I had done my analysis yesterday and we were at these levels, the narrative would have been completely biased. So, it's interesting to see that we've swallowed this wick, had a good reaction, and still have this upward trend. Despite the liquidations, the dynamic within this range is still bullish for now. We're making higher lows and higher resistances. Now, the goal is to really break this range. I'm not saying we'll do it the first time I smell a trap, especially since we still have big liquidations at these levels. So, the scenario where we come back to hunt these liquidity pockets and get rejected again would be extremely bad, in my opinion. I prefer to warn you, as long as we don't break the top of the range, I'd say we have time to see things coming. But if we break the top, get swallowed, and get rejected back into the range, it starts to look like distribution. So, we'll have to be careful. Regarding market sentiment, let's address that quickly. You'll see the madness, it's extremely rare. We were in fear, with extremely negative funding, it's still the case, by the way. We had some longs, but overall, the positions opened here were mostly shorts. So, the market sentiment turned around with a lot of fear. We see these two beautiful liquidation wicks, I'll show them to you. This is what we call a cemetery, with a lot of graves, it's all the guys who got liquidated. That's what you see on the funding and liquidations charts. These liquidations are also visible here. We found an extremely bearish sentiment in 1 hour, maybe not in the daily chart yet. In the daily chart, we still have negative funding, which is extremely interesting. Market sentiment has really turned with these liquidations. We have some positions closing little by little, but very little interest overall. If we zoom out, we'd be at a market peak with negative funding. Very strange. We're very far from having a definitive top with negative funding. I'd be very surprised. What's happening here? We'll take a look. Probably, big wallets are buying, which is interesting, while small wallets aren't doing much. They were selling here but aren't doing much now. Interesting, sometimes it can also give a market sentiment. So, big liquidation on this movement, we'll have to monitor that. Otherwise, it's stupid because last week's macroeconomic data was encouraging. Inflation was really down. For context, it's funny, Donald Trump had pushed Powell to lower rates, but Powell said no, we'll keep them at 4.5%. Today, as if by chance, Donald Trump comes out and says Jerome Powell was right to leave them at 4.5%. So, you see, it's a huge circus. It makes you wonder if the guy really knows what he's doing. I imagine so, I hope so, but we're starting to see him temper his speech a little more, starting to reassure the markets. That gives us back some confidence. For certain coins, we're managing to recover. I saw Solana doing well, but overall, we still took some -30% hits on quite a few altcoins. So, I think we'll talk about that in the week. The video might get a bit long, but I'd also like to address BTC dominance, extremely important. We'll also look at Total 3, extremely important to see the structures there. So, we'll try to cover all that in another video so it's not too much to digest. I wish you a great day, and I'll see you tomorrow. Ciao!